Hey guys, welcome to another week ahead video. Now this week we think the Kiwi dollar can provide us with a great trading opportunity with the RBNZ's monetary policy meeting coming up this week. Now in this video we're going to look at our three-step analysis process. The first step is basically to look at the baseline expectations for the Kiwi dollar. The second step is to look at the baseline expectations for the upcoming risk event, which in this case is the RBNZ's monetary policy meeting. And then the third step is looking at possible sentiment shifts that can create some great trading opportunities for us this week. So without further ado, let's jump into the video and look at these things in more detail. And if you're new on the channel, consider clicking on the subscribe and the bell notification below to make sure that you're notified every time that we release new content. Okay guys, so as you know, we're going to go through our three-step analysis process. The first step we're going to look at is finding the baseline for the currency we're going to look at. In this case, we know it's going to be the Kiwi dollar. Now, the way we find the baseline expectation for every currency is let's quickly go to the Forex source terminal. Now, underneath the currency research tab, we have the major currencies fundamental drivers report. Now, this report is basically our bias as well as the reasoning behind that bias. So what is the current fundamental analysis for each of the major currencies? And this is what we find in this report. So if we just quickly jump to the Kiwi dollar, we can see that at the moment our bias on the Kiwi dollar is bearish. Now there's a couple of reasons for this bearish bias. Mainly it is due to the monetary policy outlook, which continues to show that the RBNZ will require further monetary policy easing or further rate cuts. Now, even though the RBNZ has already eased by 25 basis points in 2019, including that surprise cut of 50 basis points at the previous meeting, the markets are still expecting or pricing in additional rate cuts. Now, in terms of recent economic developments, they've been rather mixed. We had dairy prices, which is one of New Zealand's biggest exports, actually rising a little bit in recent weeks. CPI for quarter two came in at 1.7% for the year-over-year number, which is below that 2% midpoint of the 1 to 3% target range for the RBNZ's inflation target band. We had GDP for Q2 coming in slightly better than markets were expecting at 2.1% for the year-over-year number and 0.5% for the quarter-over-quarter number, but it was still the slowest pace of growth since 2013. Now, what we also saw is that we saw recent business surveys have actually continued to soften, which is another negative point. And also importantly, a more positive one is that the exchange rate is substantially lower currently than the RBNZ's previous forecasts. So what this tells us is that at the moment, the currency remains bearish and will require fresh catalysts or triggers for clear and high probability selling opportunities on the Kiwi dollar. So then moving on to step 2, and that is to find the baseline expectations for the risk event. In this case, we know it's going to be the RBNZ's monetary policy meeting. Now, the RBNZ, we know that they cut quite aggressively in August with that 50 basis points cut, which was a surprise to markets, as the markets were only expecting a 25 basis point cut. And the reason they gave for this was basically just to stay ahead of the curve. Now, recent growth figures came out in line, like we saw with the RBNZ's forecasts, slightly better than markets were expecting, but in line with the RBNZ's forecasts, thus not really providing the RBNZ with any new information in terms of growth. Basically just means that it's now too soon for the bank to see how impactful their recent monetary policy actions has been. Now, for this reason, the markets are widely expecting the RBNZ to hold rates steady this week and to keep their rhetoric unchanged from the last meeting. Now, what's important about the rhetoric that we saw them using in the last meeting was that they came out quite dovish. If you guys remember, Governor Orr said that it was easily within the realms of possibility that the RBNZ could use negative interest rates. Now, that is a very dovish comment from Governor Orr in that last meeting. And what will be important for us this week is any move away from this language or this rhetoric will be very important for us to take note of in this week's event. Now, most analysts are expecting the RBNZ like we said, to hold rates steady at 1% this week. But it's also important to note that numerous investment banks are pricing in a 25 basis point cut for the November meeting. So it'll be very important to watch any type of signals in this week's statement, whether it signals further rate cuts ahead, like the market is expecting, or whether it might indicate further wait and see mode from the RBNZ. Now, in terms of our third step, is we're going to look at possible sentiment shifts that can create some trading opportunities for us in the markets or with the Kiwi dollar this week. Now, in terms of possible dovish sentiment shifts, what we're looking at is the most dovish reaction from the RBNZ this week will be if they come out and cut rates. Now, we know this will be a big dovish shift because the markets are widely expecting an unchanged interest rate from the RBNZ this week. So if they come out cutting interest rates by 25 basis points, even 50 again, that'll really be a very big dovish reaction in the markets, and that can be something that we can basically just enter the Kiwi dollar at market and sell the currency. Now, something on this point to remember is that the RBNZ did have that surprise 50 basis point cut in the previous meeting. Now, that basically shows us that they are not afraid to surprise the markets, okay? So even though the markets expect no cut, that doesn't mean that it can't happen. So that's just something to keep in the back of our minds. Then if we look at a lesser dovish shift, that'll be if the RBNZ keeps rates unchanged as expected, but they come out even more dovish than the markets are currently expecting by confirming a November cut and even confirming extra additional cuts, and again pushing that rhetoric that they might go down to 0% if it is required. Now that'll be something to look at in the markets. Now, in terms of possible hawkish sentiment shifts that we can look out for, is the most hawkish one is if the RBNZ announces that they are now completely done with rate cuts and that their previous cuts were enough to stabilize the economy and put growth and inflation back on track. That will be a very hawkish sentiment shift, and that can be something that we can look to trade as a possible buy trade on the Kiwi dollar. But as we said, this is really not what the markets are expecting. This will be one of those big shifts that can cause a bullish reaction in the currency and can provide us with an opportunity to buy it. Now, if the bank holds rates unchanged, guys, and they just stick to their previous wait and see stance, and all the same language and same rhetoric, we don't really see any clear opportunity to trade the Kiwi dollar with that event in that scenario. Now, possible currency pairs to consider in each of these scenarios. Now, in the case that we see a dovish sentiment shift from the RBNZ this week, we can look to pair the Kiwi dollar against something like the yen or the Swiss. Both of them remains fundamentally bullish due to their safe haven appeal, especially with regards to the concerns about the global economy, as well as that US-China trade war. However, something that is important, guys, if the risk sentiment is very positive at the time of the meeting, pairing the Kiwi dollar against something like the AUD might be a better option, as the AUD should perform well in a positive risk scenario. Now, in the case of a hawkish sentiment shift from the RBNZ this week, we can look to pair the Kiwi dollar against the euro, which remains fundamentally bearish. However, as we mentioned above, if the risk sentiment is very positive at the time, the yen and the Swiss will most likely be better options to pair with the Kiwi dollar, as a positive risk tone usually sees depreciation in the safe havens like your yen and your Swiss. So that can also be possible currencies that we can pair with the Kiwi dollar if we see a hawkish sentiment shift. Now, how will we actually trade this event? This event is valid for trading phase 1 trades if we get a clear sentiment shift. Now, a phase 1 trade is basically that first initial move after we've had a big sentiment shift in the market. Now, that's normally big moves in the markets that create big movements. normally with minimal drawdown, and is very high probability trades. Now, if you're interested to learn how this phase 1 trades work, you can check out our news trading strategy playlist on YouTube, where we post weekly examples of how these types of trades play out. Now, if we do get a phase 1 move generated by a sentiment shift, then we can also look for a possible phase 2 move, and that is basically just a pullback of that initial move, giving us a second option to trade that pair or that currency. Now, we post updates on these moves inside our tradable sentiment shift reports inside the Forex Source terminal under the Market Insights tab. Now, you can see each day which sentiment shifts are in play and which ones are still valid for trading the phase 2 pullbacks. Now, you can learn all about how these setups work during our live analysis webinars each day, which is also inside the Forex Source terminal, where you get to ask questions to our analysts, to our traders in live market conditions. And we'll also look at all the updated sentiment shifts in the markets and look at possible trade ideas resulting from these moves. Guys, as always, thank you so much for watching and tuning in. Please make sure to keep your questions coming, whether it's about the fundamentals or about this video. Post it in the comment section below. We always try to engage with every question that we get from you guys. And also remember to press that like and the share button if you guys found this content helpful. We'll catch you guys in the next video. Cheers.